All right, welcome everybody to the Bookmap Academy meeting. This is Bruce at Bookmap Academy meeting. This is Bruce at Bookmap Academy. We are going to go through your trades. This is what we do in the academy, as you guys know. If you're new here, though, what the program is all about is you come over to Bookmap. You can sign up for the academy here from bookmap.com. I'll show you where on the more button at bookmap.com, here's the academy right here. And then we'll go over Bruce's pilot program as well. And then you sign up here. Now, you don't even have to have Bookmap to join this. You can use the free version if you want, or you don't have to have a paid version. I think you'll find it a lot more helpful if you do, and ease to make good content for the markets that you watch. Anyway, this is the process in here. You can sign up. You can get Bookmap for free as you go through the process and meet thresholds of quantitative and qualitative journaling, marking up your charts. All right, so that's a big part of this. It's the heart of it. So that and it's really, okay, it's great. You make great content, but it's for you to become a better trader. This helps us with our community and everybody here. So I think it's a win-win. Anyway, something that we go even deeper in is the pilot program. So I'll go over that in just a second. Let me go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. The risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. A big congratulations for the winner of the Trade Control Panel edition of the Blue Jacket competition. Teeboho is the winner. Bookmap hoodie is on your way or on its way to you. You get 3 months of Bookmap with one exchange of free data as well. So you've been doing great content for a while, and it actually hasn't been too long that you've been entering. You've been posting a lot in the pilot program, and then we're highly suggesting to those over there that you might as well post into the academy and partake in the Bookmap Academy. Because you're already making the content, and partake in the Blue Jacket as well. So you're doing all three, and look what you've done. So good job. Fantastic work that you've been doing. We're going to go over some of your content tonight. Anyway, I think you're in here. Oh, he's not. He's got to come in here. We just missed him last week. Anyway, congrats to him. Our academy process in here, especially in these markets these days here, news-driven markets, it's really important to understand that news. It's the impetus that's moving the markets. All of a sudden, you just might get one huge big swing and readjustment in direction, and it's going to be based on the news. It could be some sort of tweet. It could be anything, really. We're in a war environment, and the markets are very sensitive to the price of crude oil, and a lot of other things going on as well. All of these things combined. So anyway, news-driven market, really have to be careful. There's different ways to manage that. We can talk about that later, maybe in a bigger discussion. But then watch your key levels. And then start to develop strategies and scenarios around your key levels, and then it comes down to your setup. And this is what we're doing and going through in your journaling here in the Bookmap Academy with your checklist, grading your setup, determining your risk and sizing, and then waiting for and watching and getting that edge using the order flow for your execution. Anyway, that I mentioned that pilot program is a subset of the Bookmap Academy with the goal here is to build out a trading edge for yourself. This is the biggest distinction I've seen between traders that maybe struggle or are, just kind of back and forth, and those that start to turn that corner and make it into profitability, is they are trading with an edge. They have learned how to harness and leverage that edge, and most traders don't. And they just come in, they learn a few setups, and they start trading, and it's very random. So if you're interested in this, it's also it's included with your Bookmap subscription. Go to the More button, and then right underneath here, Bruce's pilot program, and you can sign up in here, right? We will need to verify you have Bookmap as part of the entrance into the program. All right, so let's jump in here and let's see who is in here and who we want to go over. Just take a quick look, and let me invite some of you guys up to the stage as well. Let's see, got DNT. Okay. Why don't we start with PMAG? I don't think we've had you up here before. And also you as well have started to put your spreadsheet together for your Bookmap Academy. So let's invite you up, and then we'll go over your content here. Okay, you've been doing great work for a while now in the pilot program, so it's nice to have you come up to the stage now. Guys, get your mics ready if you can, so we can dive in without any kind of back and forth here. Is this the one I wanted to go over? Maybe it wasn't this one. I think it was actually this one or this one. I want to go over this one actually. So PMAG, I don't know. I can't hear you.
Yeah, I'm here.
Oh, there you are. Okay,
Yeah.
excellent. All right, so let's take a look at this one. And this was it's a replay file here from March 6th, trendline break accumulation. And why don't you
Sure.
walk us through the trade and your decisions, and what you learned and what you liked, didn't like, etc.
Yeah. So, hi everyone. That's the first time for me here, and I appreciate that. All the people that know and the people that learn, and
Can you
thank
can
you
you
very much for
speak
this
up just a
opportunity.
little bit more? It's kind of hard to hear you.
Can you hear me now?
Yeah, just maybe a little louder somehow or closer to the mic.
Uh, can you hear me now?
Yeah, it's still faint.
Uh, Not sure how to fix it, Bruce.
Okay. All right. Well, we'll try it. Why don't you try, and we'll listen in hard here, or carefully.
Yeah. Basically, as I said, I mean, for me, it's a real opportunity to learn all the order flow and price action. In my past, I didn't do day trading, but basically mostly options, uh, credit, credit spreads, etc. So all this day trading is kind of interesting in the sense that I'm learning a lot, uh, and the beauty in that is that it makes sense because many times when you look at the candlesticks, and all the indicators, not always it makes sense. I say, what the heck? I mean, what is supposed to show me? But here, on the heat map, you basically see how the market operates. And I saw one of the videos that one of your famous students at the time, Crash F16,
Uh-huh.
and one of the things that I took away from that, one of the things was the fact is they said, look, I mean, look at this as kind of a radar, basically. The pilot has those radars, and they see all the airplanes around them, and who's a friend, who's a foe, etc., etc. So that's how I started to look at the heat map, looking for opportunities, and that's what I like about it. And of course, trying to follow all the rules that you teach, and the team of coaches and all that. It's very, very interesting from my point of view. In any case, just to cut to the chase here, I mean, this basically was an opportunity to capture two birds in one stone. Well, not in one stone, but this was an opportunity to do two trades while looking at the same chart. Uh, on the left side, this is, give me 1 second here. Both of them are T trendline break accumulation. Give me 1 second here. Let me see that I'm. Yeah, and basically there is two trades. One of them, the first trade start with the trend goes upwards, and I mark it there on the left side, and I was able to identify and recognize, where is passive accumulation. And I think more importantly, or at least as important, was the fact that there was absorption there, which was important. I think one of the challenges that I had in the past was not actually seeing enough, enough passive accumulation, in the sense that you see maybe two levels, one level, two levels, and then you think you're good, and then this is when you enter, and then when the structure broke, you enter, and all of a sudden the market goes against you. So I decided to really follow the rules simply as they were given. Try to identify 3+ levels of passive accumulation. Make sure, or at least see that there is good absorption there. And then once the structure is the break of structure of the trend line, this is when you enter, and that's what I try to follow here. That's what I try to follow here. And while looking at the market going downwards, in a sense that the trade was good from my point of view, I exited and continued looking at the trend, and all of a sudden I understood that actually another trend is forming, this time downwards. And again here I try to look for I looked for the passive accumulation level. I saw that there is a sufficient levels, sufficient here. I wasn't able to find if there's absorption or not. So I said, okay, I'll just go with that. And when I saw that there is aggressive accumulation, this is where I enter after the structure was broke. And that's basically it. And I try to target the liquidity that you see on the right side. This was more or less my target. And that was it.
Yeah.
I think, yeah.
Yeah, great stuff. I mean, great. I have a question for you. I mean, there's all sorts of details and things we can all kind of dive in here too, and maybe I'll turn it over to DNT or John on and get going with that. But just in general, like this is showing pretty good. And now I know this is replay mode, but you've been putting a lot of trades on and going through the replay mode and capturing all this data in the trading journal. And you got feedback on that as well, which I'd like to hear about. But um, this what this has led to, it looks to me, is it's starting to kind of open up the ability to see this pretty quickly and to be able to react. And I'm just kind of curious, do you feel that way? Is like being able to look at many replay files like this helping you be able to see things quickly and react quickly?
Well, the answer, in my opinion, is yes, in a sense that I learn a lot, and yes, I'm able to identify different structures. Do I act quickly? Well, I think that's something that I need to improve on. Acting quickly is probably something I need to improve on, and I think that you touched that. One of the things that you touched in the review that you did for my journal at the time was about letting trades go against me instead of closing down. I think my challenge is to cut my losers short and let my winners run. These are the two things that I think I I call it mental challenge. Sometimes you kind of have a fear. I mean, is it gonna go against me? And then you close the position. All of a sudden, you see that the trend actually continues, and you could make at least 5 or 10 more points. But I just didn't have the what it requires to do that. But you're right. I mean, the fact that I repeat and repeat, and I think you mentioned that repetition, repeat everything again and again and again and again. That's what I try to do, and all of a sudden you start to recognize different patterns, and that's what I like about this
Sure.
whole course that you actually provide the academy.
Yeah.
There is a method.
Yeah, yeah. No, it's great to hear because, I mean, you've been doing this now for, I don't know, a bit, some months now, I think. And it looks to me like, it's working well for you. Uh,
I appreciate that. Thank you.
anyway, I'll turn it over to John, and let's have him take a look at this.
Okay. Um, Excellent. Very good. My one question would be the exit on the first trade, short coming down. Beautiful entry. You saw the volume, but with that much volume, sell volume coming into the market, I would have been looking for a bigger target, down to 67.50. Um, what I try to do is look at the most predominant level of liquidity. Yeah, right in there. And it was showing somewhat at the time of the entry. In fact, on the below your entry, that was the most significant liquidity showing. And with that much volume, I think I would have been shooting for that. And then that new volume comes in at 67.55. I probably would have taken the trade there, because I'm always looking for where's the liquidity, where's the most predominant level of liquidity. So I just kind of wanted to get a sense of, you understand what I'm saying, and your early exit there. Do you see what I'm saying?
Yeah, absolutely. I mean, that's exactly the. I mean, you're pointing to the challenge that I have. Closing a position too early. And again, this is because of the fear that it will turn against me. While in this case, just by looking at what you showed just now, the fact that there was liquidity, and this should be the target for exit, and not the somehow arbitrary exit that I took there. Well, it wasn't arbitrary, but I took it there. I could stay, at
Mhm,
least 10 points more and make
mhm.
technically more money. So I totally
Yeah,
understand what you're
eh,
saying, John.
and there's nothing wrong with taking a profit ever. But you did have some sizable volume dots and volume bars. And on the buy side, the second, you called it perfectly. You went right to liquidity. And you saw that how liquidity can, it can exist as a magnet. It really
Mm-hmm.
isn't, but if you perceive it that way, it can help guide you. And you had all that volume coming in. That was beautiful. That was lovely right there. You noticed the volume coming into the market, and bam, um, you had zero pain on the near zero pain on that, and it was. That was really good, but that was my only comment. Other than that, just A plus, very good. You can make a living off of this for sure. Bruce?
Appreciate that. Thank you.
Yes, sir.
Yeah. DNT. Any insights?
I found it in. You can hear me, right?
Yeah.
Okay, I found it interesting. PMAG, you use the limit order entries. Is that right?
Yeah, yeah, I do.
No, no. It looks like it's
Uh,
a sell
Am I
stop
wrong?
here. Uh,
no,
Sell
that's
stop.
yeah,
yeah.
and a
I'm
buy
sorry,
stop
just give
down
me one
here.
second.
So
Buy stop. Yeah.
he puts it in, and once it's touched, it turns into market.
Yeah.
Yeah,
All right.
That's
Very
what it looks like.
interesting.
Could be buy
Is
limit,
that what?
but
Okay. I'm like, I don't use any of those, so I have no idea.
oh,
I know.
it's real easy. DNT. I'll show you.
Yeah, I think I've done it before, but I don't normally enter like that. I'm just curious. If
well,
you oh, okay, I see your stop on the short. I see your stop on the short. Okay, so so this is just a one-to-one for now, right? And you're doing replay, so you're hitting the oh, do you flatten the position there? Is that right? On your short?
Meaning what? I'm sorry, D&D.
When you shorted, you flattened your position there?
Yeah, he did.
Yeah.
Yeah,
Okay.
yeah, I did. Yeah.
Okay.
Now here's the
Yeah.
thing with that, and that's a good point that you make. I one of the difficulties again because I like probably many people on the team or in the group that are day traders or were day traders. I didn't do day trading at all. I mean, basically for me it's options and just change the world. For me, I just took a different angle or vantage point how to look at the market, and I like it. I like it. It's interesting. It's more exciting in a sense than the options, from at least from my point of view. So I'm learning, for example, how to deal with the trailing, trailing stop. How far should it be from the enter, from the stop loss, things like that. For me, it's a challenge for now. So what I do, I just decide. Okay, I'll put like maybe 10 or 12 ticks, which is about maybe 4 points, and that by definition will be the maximum risk I'm going to take. Is it wise? I don't think that's the best way to do that, but at this point, that's what I know. So hopefully in the future, I'll be
Yeah.
able to fine tune it.
Yeah, that works. I think it works, especially for if you're doing, are you still doing replays or did you go to forward trading?
Today I did the first one using the simulator, and that was difficult, much more difficult than replay. But all in all, I mean, I ended up, with the positive. I mean, above, not underwater. That's what I mean to say. After I finished the day trading, so yeah, I started today only on the trading simulator, not real money. But as I said, it is more challenging. Absolutely.
Yeah, it definitely is. I've seen I've seen you posting in there for a long time. You've been in the pilot program for quite a while, right? And yeah, it's good. I like it. There's if you were to if you're when you do replays, it's kind of I've advised just to, if you wanted to help kind of give yourself to teach you to train yourself to kind of let trades run. You can just especially in replay it's a lot, it's hard still because you still feel the pain. You still feel, if a trade goes against you, you still feel that loss. You still feel everything that you would feel in live. So when you're doing it in replay, um, let it go. Just target the liquidity and just let it go. And if it comes back to you, then just take it. And then that's just like that's exactly kind of how trading is anyways, is you have your entry, you have your target, and then you set your stop. And usually, like the way that I've been telling the other people in replay mode, just set your stop outside the structure and then, put your target to the liquidity or the next swing. As long as your risk reward is kind of in your favor, just
Mm-hmm.
kind of take your entry, take the, and then you're going to, that's the whole point of replay, is you want to hone your execution, because that's what defines your risk and reward. And that's where you place your stop, because you still want to place your stop outside of the structure,
Mm-hmm.
and you still want to put your target to where your target is going to go. So like either the swing, the previous swing high or the previous swing low, or the liquidity. And so like your stop is structured and your target is structured. The only the big variable is where your execution is going to be. And then you just let the trade kind of work itself out and play itself out. And then when you're doing it in replay, you're not really losing anything. You're training your mind, and you're training your psychology. You're training
Exactly.
all these things. Yeah. So when you see the trade and you take it, just you're just working on your execution. Just place your stop and place your target, and just kind of feel it work out. And then you get to see the rotations happen. You get to see the market go here and then go against you, and then go in your favor, and then go against you, and then you feel all that as it's going towards you. And then that's just how trading is. And I take stops all the time, and it's painful, but you just have to take these trades And over time and over thousands of trades is when your edge plays out, you know. But yeah, when the order flow goes against you, so you'll start to see it. But if you cut the trade short, then you can't. It's harder to see it. You want to, you know, you'll feel the order flow start to go against you, and you'll feel impulses go against you, and then you start to be like, okay, so this is what it is doing when the order flow starts to go against me, and then this close to my target. This is a good time. Maybe I could start flattening my trade. But if you're cutting your trades in replay mode, you're not going to know that. You're not going to really get a feel for when order flow is starting and price action is starting to really go against you because you're cutting your replay trade short. But if you actually let them play out, you actually really get to see what order flow against you should be like, and price action against you really is. You know, does that kind of make sense?
It does. It does. Good stuff. Thank you very much. Really appreciate this input. Yours and John.
Yeah.
Thank you very much.
Yeah, great stuff, man. You've been doing a good job.
Thank you.
Yeah, I kind of want to echo that what DNT was just saying, and John. So this is replay mode. So just play it again, you know. And I mean, in here, there's so many refinements that you can make just on. I mean, you did a great job here. Okay? It's not a criticism there. How can you get better? And replay mode offers this because all you have to do is click back here someplace, right, and replay it again. You know, look for, okay, it broke this structure as well as, you know, your trend line here. You notice that the volume coming in, okay, I think your entry's pretty good.
Yeah.
And play around with the stops. So up here you had your stop. Reach out to Trading His Life about the stops. He's passionate about it. In the pilot program, you know, as soon as it breaks this, see this little structure here. As soon as it breaks that here, you can move this stop down to here, right? The idea is let it be one structure, you know, back. So if it makes a structure down here, you're kind of protected, right? That's the idea. And then just keep trailing it. Once it breaks another structure here, now you can bring it down to here. Okay, once it breaks, you know, once it breaks this structure in here, like you can bring it down to here, right? And you should be safe. And trail it down. And then, like John was saying, like start to look for where these targets might be. There's a nice swing here, and there's a ton of liquidity coming in here.
Yeah.
So replay it again. You're going to learn so much. I mean, instead of getting out here and by hitting just, you know, flatten, now you're going to try 2, 3, 4 more times to get more out of it.
Yeah.
And you're going to learn so much. And this is the quick path using replay mode. Don't worry about it skewing any sort of data in your replay web journal. Don't worry about it. Just keep doing it. Keep trading it over and over again. Put in the reps and try something a little different. Focus on something. So, for example, you are worried about it going against you. Okay, so work on that, and work on that in this replay file, and do it again and again. Here, I think you did a pretty good job. You placed it well. You hit again flatten right when it's right before the liquidity up here. But I mean, look at this move. I mean, like it's you know, that was a good decision, I think. Anyway, yeah, these kinds of things, like I think will help you immensely as kind of the next step. Like in here, some really nice things too. Like this is pretty good accumulation as it pulls off of here, breaks or tests the structure, and then you notice it here, right? This accumulation starting to come in on the buy side, and it worked out very quickly and very nicely for you. But you know, start to by replaying it again and again. This is like that you know, taking that jump shot over and over and over again. You'll start to notice little differences. Oh, what if I kind of lean this way? Or, what if I'm going to take it from this other spot on the court? I mean, the sports analogies go to any sport, really. It doesn't matter. But just keep replaying and then make these changes and nuances. And you'll probably take about 5, 6 trades in here. Just replay it again. And you don't have to worry about taking a loss. So, and in fact, if you do see it going against you, take the loss. Take the loss. And just replay it again. I lost on that one. What did I do? Go back and replay it again. Where would I put my stop differently? What was bad about my entry? What was I, looking at up in here? I think that kind of nuanced approach with intention will really expedite your learning.
Mm-hmm. Thank you. It's like in the infantries, they say no sweat and no sweat, sweat saves blood. So in essence, you say, okay, you need the pain in order to gain later on. I get it. Makes sense.
Yeah. And this is the safest and the quickest environment.
And funny, you still feel it. You still feel the pain.
Yeah, but I think you also feel the loss, how to take a loss quickly too.
Yep, you're training your mind to take all that.
Yeah. You're like, dang it. Oh, let me try that again. Dang it. Let's try it one more time. And then you'll get it. Anyway, I don't know if you guys have any more comments on this. No. Okay. Let's see. Teeboho is here. Teeboho. And David covered you, so we haven't had you up to the stage either before, so it is due. Teeboho, you didn't see it before, but you missed it. You were a little late coming in. Congratulations to you for the Blue Jacket winner. And great job. And you haven't been doing this long in the Bookmap Academy. I mean, you've been doing it for a while in the pilot program, but then it's like, yeah, I'm gonna get a spreadsheet. I'm already making the work, so might as well put it into the Bookmap Academy and also join the competition here. So great job there, and you won. So way to go. Let's invite you up. And let's get it going here. Okay. On. Okay, so get your mic ready, and we'll jump in. So why don't
Yes,
you?
good evening, Bruce.
Good evening. How are you? Congratulations.
I'm good. Thank you so much. I'm so excited about about the win. I really worked hard to. It was a good practice for me. So I'm glad.
Yeah. Congratulations.
Yes.
So walk us through this trade, and then we'll give you some feedback.
Okay, thank you very much. Well, this trade was interesting for me for a number of reasons. As you can see, I drew up 2 lines because I saw the first move, the aggressive move upwards, but then it sort of changed direction and moved like in a parabolic fashion. So I felt I needed to draw a secondary a trend line. And then I saw the thick liquidity at the top, and did anticipate that would act as a resistance with a potential by absorption, and that's where I positioned myself to then enter a short going down. But the most interesting part for me, especially with this trade, is that since you encouraged me to trail my stops and you kind of like gave me guidance on how to do it, so I've been set on on doing that. And the first trailing stop out I used there was to break even just at the entry on that small microstructure there. So I trailed my stop there. I think similar to what I had earlier on when I came in with the feedback you were giving. And then I saw this this pattern of a pullback. Robert later explained it to me. I did not want to assume that it's a low volume pullback, and it was kind of interesting for me to see it as a very nice, clean pullback, and I was seeing the buy side liquidity there. Initially, I even asked myself whether is that the reason for the pullback, and I really wanted to have a very intelligent understanding of that that structure, why it happened, and how I should read it. And then I continued monitoring the order flow and the structure forming, and using that to trail my stop up to that thick liquidity there at the bottom on that swing. I then exited there. Since I'm in South Africa, I'm able to see very clearly the Asian and the London sessions, and I noticed that key level, that it was the high of the Asian session. And I noticed also that the price really moved, even for the New York session, it moved briefly upwards until it came back. So for me, it became the key level. So yeah, I kind of enjoyed it a lot, especially noticing those nuances of the microstructures and using those as the basis to trail my stops. I think that's something I'm still working on. So yes, that's the trade I took, Bruce. Thank you very much.
Great work. So D&T, why don't you jump in and give us your take?
Um, yeah, I was gonna comment on this too this weekend, and I don't think I did. I don't even remember what I was gonna say, but because this looks so good. I don't remember what I was gonna say. It looks clean. Maybe let me see if I could try to gather myself and figure out what I was gonna say, and then I'll get back to you.
Okay, John, if you have anything lined up.
Sure. A great trade and a great read. Your target was spot on. The second trend line, I want to talk about that. So the first trend line, which creates the entry, that's perfect. That's well done. The second trend line, I'm not seeing the relevance of it. What I see though, what is more important, is that after your entry, the market comes down and it passes through a lot of liquidity that's in the market. You know, there are buyers resting in there between 67.05 up to 67.13 where you got short. So over a little bit, Bruce. Just under his entry. I want to showcase that liquidity that's in there between 30, exactly. And the market went right through that. That to me is what is significant for more downside action. In addition, below that 67.05, liquidity begins to dissipate. So that really gives it running room, exactly, down to your target liquidity at 6,700, which is always a flag in the sky. I mean, that's something that everybody's looking for. And 6,700, those century numbers are they just stand out as significant. But I see the mapping of the liquidity more important than the secondary trend line. But I see that as beautiful, and that would have been, something significant to me to see the changes in the liquidity. First, you have the order sitting in there between 6706 up to your entry, and the market just sliced right on through it. Made a little bit of a correction, and then there's very little to stand in your way down to your 6700. And so, like I say, I think that's more significant than this trend line, because I'm not sure that really matters all that much. I think the change in liquidity is the most important thing, and it's probably the reason for the move. Bruce?
Yeah, yeah. Nice. Like I think what you're noticing also here, like this 10 level is pretty important.
Yeah,
Because high liquidity here, it goes right through it.
yeah,
And then they're on the bid here, supporting it.
yeah,
It goes right through it. Now they're on the offer again.
yeah,
So the book has flipped a few times,
yep,
and so that's a pretty kind of key level that there's players that are looking. I mean, you can see like what was resistance becomes support, and what was
yeah,
support becomes resistance, and
mhm,
as it kind of plays through that,
mhm,
and um, yeah, I mean, you did a great job. I mean,
yeah,
I think with the trailing of the stop. Again, I talked to our resident expert with trading his life, and the way he moves it when it breaks certain areas and continues on, that's when he moves it. You're pretty close there, and then again, like yeah, it breaks it here. This looks great. This one looks great to me, and then you moved it down. So nice work there. Uh, this is really good trading.
yes,
The I would there's something about the trend line that always kind of haunts me. It and the name I put into the setup. Uh, drawing your trend line. I mean, basically, it needs to come back to points on it, and I don't see any points in here. Not sure where this um, you want, because it has to be respected basically, and here you got two points, and then it is funny, it just kind of you know bounces around in this area here, but um, yeah, how would you draw your trend line? Maybe it would be like this. You got 1, 2, and 3. you know it's kind of hard to say, but it's just like the idea is um, how the market is relating to the structure. Where is it a deal? Where is it not? And it might be diagonal. It might be horizontal. In this
yeah,
case, you got a nice horizontal one that you notice. There's two actually. There's one here, but you made a trade decision off of this small one here, and it's nice. It's really nice because you definitely got the high liquidity, right? And that you noticed getting filled. And then
yeah,
you got a little double top in here, and there's very little buying up here. Sellers
yeah,
coming in. As soon as it breaks it, you're in.
yeah.
And that's great. Uh, and That's all I have to say, really. You had a question about the low volume pullback, though. Is that right, Teeboho?
Yes, right at that second trend line.
So in this one here,
Yes, that one over there.
yeah. There's a bunch in here actually. And guys, I'm next. It'll be next week. You should have gotten the journal or the digest today. So Monday, or maybe I think Tuesday, I'll hold a pilot program meeting, and we'll release all these new files and materials for you guys, and the low volume pullback. So there's one here. There's another little one here, and this one too. It's a bigger one, but there's some beautiful things that like John was mentioning about the structure, and we were just talking about the flip of the book. And then just look at the pullback in here and the low volume on it, and you know, this volume compared to this volume, and this is an impulse move, no doubt. It's a good one. So you're looking for it's about halfway of the impulse move. You've got some liquidity there. You don't really know how much yet of the buying pressure they have, but once you start to see this in here, it looks like it's ready to go. And that's where I'd be looking for an entry. And then, yeah, taking it down to basically down to the liquidity here. So anyway, we'll get into the criteria in more detail here, but there's a whole lot in here for that. So some good stuff there. D&T, did you recall anything that you wanted to mention?
It was the same thing I think that you guys were going to say, but I think it's just critiquing the trend line, which isn't like too big of a deal. I don't think it's too big of a deal. You took this trade. You posted another trade just like this on the same day, right, Teeboho?
And the next day.
Do you
yeah, it was right the next day,
Bruce, or no?
Like 30 minutes apart from this one. Yeah. So it was interesting for me to notice the exact same pattern. I was even worried whether the coaches will think I've just posted the same trade.
No, it looks exactly the same. But see, the thing is it the one that we're showing right here was the it. Hold on, let me close my. Sorry about that. This image you're showing here was a break high out of the opening range, and this is like the second extension here. So you're fading you're fading the second extension out of the opening range. So this is a pretty good short, and the aggressiveness of it kind of calls for it. Although it did pull back to you have the entry, and if a little bit to the right, you get a nice pullback, just slightly to the right of your entry, and that would be where I'd hopefully be looking to get. Yeah, right there. That's hopefully where I'd be looking to get in, so I can place my stop around the top. And you notice that it's right next to your entry, so it's not you entered kind of aggressively, whereas I probably would have took the pullback. It's just it is right next to your entry, so it's not like if you had waited to not take if you waited to not take the aggressive entry and you waited for the pullback in, because sometimes those aggressive entries don't really work out. Sometimes it goes right against you, but I mean, either way, I don't think I'm making myself clear. I'm sorry. If you waited to if you just passed up on the aggressive entry and you waited for a less of aggressive entry, you got the pullback, and it's at the same price. So entering aggressively doesn't always necessarily get you a better price. Waiting to get the pullback, sometimes after you get the impulse down, then you get the pullback, and you pretty much almost get the same price, but you're not entering aggressively at this point, because I don't know if that kind of makes sense or not.
Yes, it does. I can see it now. And about the two trend lines, the longer one, I wanted really to have a much bigger picture about the trade. So I wanted to map it right from below, and I was seeing that as part of the move upwards. So that's why I started it there. South African time, it was around 4:30. And then the second one, my second joining dot is that red dot just after buyer absorption when it was starting to go down. I'm not sure whether I moved it too far to join. Bruce, I can see where you say I should have potentially draw it from.
I'm sorry.
Just before my entry.
Uh-huh.
Yeah, right there. Yes. Yeah, that's where I was joining the second.
I like this entry a lot. I mean, it is aggressive. And you know, all it did was kind of trade down here and then it pulled back. But it's a beautiful low volume pullback in here. And then I think DNTU probably would have been in here, probably, I imagine.
Yeah.
And
Yeah.
and
I as much as I try to actually nail the middle, that high volume node of the structure to the left, I miss it often.
yeah,
I need to
it
get
can be
in.
tough to grab. It's true.
This looks good. It's kind of crazy. The image I just posted in the chat looks exactly like this one, except yeah, it looks exactly like this one. It's kind of funny. Yeah,
Yeah.
this is his
Yes,
other
yeah,
trade.
that's the one. That was like 30 minutes apart, and the same pattern. I couldn't miss it. I think that's one of the benefits I'm seeing of the replay mode is that my eyes as spot the setup as it forms. So I really couldn't miss this one. I saw it as it was forming. And this was after Robert had commented on the earlier chart, so I even better insight about this formation. So I really couldn't miss it.
Yeah, yeah,
Really cool.
this is
Looks
great.
good.
And this is so much cleaner for me that you've got your other point here, you know? So you got your third point and it respected it for a little bit and then it broke. But just for, I mean, and it's not a criticism on you, Teeboho, so much, but just again, it's really about market structure. It's not about really the trend line. If it's a structure that's diagonal and it's respecting it, then we can look at, you know, some channels and trend lines.
Yes. Yes.
If it's not, and if it starts to kind of morph into something else, we
Yep.
want to look at that structure, and is it respecting it? So you've got actually two different reasons here to,
Yep.
and it's a beautiful entry. Again, just
Yep.
beautiful.
Yep.
So you've got two structural reasons there to enter. And then you trailed your stop beautifully as well. Maybe a little too aggressive here. You know, if as it broke, well, let's see, as it broke this one here, you would trail it to here, I believe.
Yeah,
And
yeah, you want to trail it behind structure, not your entry.
yeah,
Usually.
so yeah, I mean, I know you put it at break even
Oh,
plus,
okay.
but see, this is where
Yes.
you almost got stopped out. And
Yes,
give it
yes.
just a
I made a
little
note.
more.
I made a note of that also.
Yeah, yeah, and these are things. It's really good. It's really good. You made a note of that. So go back and don't, you know, work on that. You know, try to overcome that. Don't do it again.
Okay.
And get in the habit. Like, give it a little more breathing room. Okay, you'll take a loss. It'll be a bit more, but so what? You know, you won't get stopped out, and you'll capture all this. And you know, you'll find what works best for you, what you like the best. And um, anyway, yeah, it looks like a carbon copy here from the other trade. Let's see, John. I don't know. Do you have anything you want to mention?
No, no. I think we've covered it.
Okay, all right. Let's see. Let's see. So we got Teeboho, we got PMAG, and let's see. What else do we have here? This is okay. We got non as well, and that's right. Okay. And let's see here. All right. So It's I don't think we went over this one but I hope not. Throw it into the list here. Okay, get you up on stage. All right, there you are. And thanks again, Teeboho. Great work.
Yes, very good work.
And Nan, if you want to give us your take on this one. And we can't hear you. You are the speaker, but we can't hear you. Okay, maybe you want to exit and come back in, and or hit Control R and refresh in Discord. That'll probably do the trick for you. Okay. Yeah, and then make sure your settings are good. Invite you back up. And still can't hear you. So something's up. You were great last time. Everything was perfect. Okay, yeah. So something's wrong with your settings there. But anyway, see who else do we have in. Benegri is one, but I don't think he's in. Obi covered him. Guy. See, we got Vintra, TD. Get Non back up here. Okay.
Okay.
There you
Are you
are.
hearing? Oh, okay. All
Yeah,
right.
great. Okay,
Okay.
welcome.
All right. Thank you.
And yeah, give us your take on this trade.
Okay. Let's see. Okay, so I think I did this a couple of weeks ago, so I'm trying to refresh my memory on it. All right.
Yeah, I think it's on the 11th or the
Yeah,
11th,
yeah,
maybe.
the March 11th. So okay, that was
Yeah,
roughly a week ago.
yeah, about a
Okay.
week ago.
All right. Um. Okay. On this particular trade, uh, Yeah, I'm just reflecting on my notes. I apologize. Okay, so this is the. I don't think I have two charts. The first one to give the bigger picture with this one, because I would have noted it at the very top, chart number one, chart number two, but this is just the one chart. So price came down on this prior, as the trend line broke. It came down from almost a 50-point decline from the opening high. And it first seemed that the passive accumulation was lacking. There is some green and some yellow, but not significant as, textbook would have it. However, when I zoomed in to get a closer look, it did confirm that there was sufficient liquidity to have driven the price down there and then take it back up. So I just wanted to point that out. It's not clearly visible as you look at it there. There's one long stream of red, the first line, and then the next two was not as much. So um, the sharp rally sparked both the double bottom formation, which I had pointed. Well, I don't think I pointed out there, but the double formation, bottom formation, um, and on the second bottom, price climbed pretty rapidly on the first leg, and when I saw all of that green bars coming in there and the break of the structure, I it sensed to me that it was time that the price was ready to move up. So I made the entry at that point in time. The exit, as I marked at the very top, most of the liquidity at liquidity at the top were not in existence when I entered the trade. So it was hard to determine whether it would be 6,800 because I entered around that 6780 and it would either go to the 90 or 6,800, 10 or 20 points. So
Mhm.
as the trade progressed, then the liquidity at the top came in, made it more clearer around 67.95 as a liquidity target. But uh, the pullback was pretty close after my entry, and I was a bit wary as to whether I should stay in the trade or not. But it did prolong for some time, and it sort of moved sideways, still moving upwards. So it was a bit troublesome to determine a good or safe exit spot. After it had, moved sideways, sort of with some incline, I got out of the trade, and then it moved up almost a minute or two later, and it hit the um, around the 6803 exit, which I missed about 5 points. But I'm glad that I was able to analyze the fact that it was moving up, but not as rapid or fast, and it was better safe to get out where I did, or even before, because I really didn't gain a whole lot if I had exited at like around 10:45 versus the almost 10:55 when I exit the trade. But overall, it's not a classic textbook because if you look when you look at how I rated the four criterias, the break of the structure, I gave it a 9. That was the only thing that I felt was um, best in the trade. The rest was like a 7, but it still had some of the features. The aggressive accumulation helped to solidify the entry at that point in time, and then so it was a sort of a doubtful trade, but it had some of the features that we look for in the trendline break and accumulation.
Yeah. Yeah, that's really great to hear. I got a load of comments, but I'm going to turn it over to John and let him take it away.
Okay. Excellent trade. And like you said, you really don't have a clear target, but you did have this huge run down. So lots of times you're not going to have liquidity to create a nice target for you. But what you did have is new liquidity coming in at time 1030 at 67.87, right above. Exactly. And so you have your trend line break, you have your volume coming in, and then you have that new liquidity going above, being placed above. And sometimes those three things are enough to really get me interested in getting long here. In fact, without that liquidity, I probably not. So that's a telltale for me. And then as the market does make its turn, then liquidity is going to come back into the market. So like I said, it's not a surprise that you had liquidity being filled in there at 6,800 because you came down so far so fast. But that initial impulse right there of liquidity coming in at 87, that was really helpful. And I'm right with you as far as taking the trade. I think it's an outstanding trade, especially in light of how far and fast this came down. I mean, it's enough to scare the wits out of you. But you did see the liquidity start to come in. And I think your management, your trade management was outstanding. And it's a bit sloppy in there. It's busy as you were in that trade. My goodness. And I think you did an outstanding job reading through that noise and picking that spot for your target. I think it really was the best place for the target, all things considered. So very good. If you can do this, then you can pretty much do that trade. See through a bunch of the noise that you have in here with that. Bruce?
Yeah, yeah. I think I'll let DNT take the next round, and then so I don't steal anyone's thunder here.
Oh, that's funny. No, there's no thunder. I just don't really have much to say. I mean, it's perfect. I think John said it well. Even the entry too, you have like 5 points up to that liquidity or the previous swing to the left where your entry is at. So you entered, you still have about 5 points up to that swing to the left. So if which is good room. Yeah, right there to the, and then if you draw a line, you see the previous swing low to the left of his entry.
Here?
Left. So go to the entry. I'm sorry, previous swing high. My bad.
Oh,
So where the entry is at,
yeah,
point to the entry,
yeah.
and
And
then go to the
this
left.
one, this one. Gotcha,
Yeah, right there.
gotcha.
That's my fault. Yeah, so that's about 5 points. So that's pretty good. So if you entered multiple contracts, you can take some risk off right there. And we see it didn't come back on you. It consolidated, so you could draw a horizontal. You could draw a horizontal rectangle right there from that that little consolidation right there. Yeah.
This one to this one,
So
actually.
right there, yeah. So that's you could draw, and then you get a low volume pullback to that structure again. So if you're just entering, taking singles or whatever, you can enter on the low volume pullback again for another long. I mean, it's pretty. Yeah, it was pretty nasty, like John said, to the left of your entry, but after that, it really cleared up. And really lucky it didn't come back. Lucky it didn't come back on you. It's going into an imbalance here, based on that consolidation, and then it goes higher, and then it keeps going, and then it keeps going. It's pretty good. I mean, it's good. You were able to recognize that. I like that. The transition is very clean. So you outlined the delta bars on the bottom. The transition from the sellers to the buyer is very clean. I don't know. It looks good. I like your trades, and then your risk reward too was good as well. It looked kind of like you didn't have a whole lot of room to up to that previous swing high to the left, but that's 5 points. That's quite a bit. That's a lot of room to get some risk off. So looks great.
Yeah, Nan, I actually you mentioned a few things that kind of caught my ear and then reminded me of like some of the files that I'm putting together for you guys for this low volume pullback, and it was a little tricky. That's why this is. I wanted to do I knew that there was going to be, or I assumed there was going to be questions about some of those files, so I kind of had to go back in and redo some of them and look for cleaner setups. And what really caught my ear was you said, well, it was kind of I mean, the three levels of liquidity I think is really good here. And you had to zoom in to see that, right? And I think that's another really good tip that you mentioned there, because sometimes if you're zoomed out, you're not going to see all that. When you zoom in, you'll see some of the details, and then it's like, oh wow, this is looking really good. I think this one's really quite good. In my opinion, I wouldn't give it a 7. I'd give it more than that. Especially like we mentioned that you really want to see it down in these areas where it's starting to absorb, and then you want to see those clusters of buying coming in. Up here, it kind of blew through it, and you know, uh, uh, I always try to look for more of a bounce and a cluster of buying, and a bounce and a cluster of buying, and then I know now that this is significant. It's having an impact on the sellers, and it's starting to absorb them. Anyway, getting back to the main point is you said, well, it wasn't really that great, and I agree, because look at all this. I mean, it's noisy, it's chaotic, and there's liquidity on the bid, there's liquidity on the ask, and this thing's just chopping around and grinding higher after that 50-point move, which I think was great that you noticed that and you're looking for that rebound. So I think all of that is really good. All of this in here, though, is just a little chaotic, and where I was getting to is like it's funny how I started to call some of these, like a setup like this, as more advanced, and for this trend line or for the low volume pullback. And I was like, well, wait a minute, it's like that's going to confuse people even more. I don't want to call it advanced. I'll call it something else, because what becomes clear is we're looking for the best setups, the clearest setups, not the advanced setups. I mean, who cares about that? Like, it's just more confusing. So the cleanest and the clearest. And when we start to see stuff that isn't clean and clear, maybe that's time to like say, like, I'm going to pass on this one. Now you got a great trade here. I mean, you nailed it. Like, you got how many points here? From 80 on up to 94 or so, right? You got a 14-point move. That's fantastic. And do you understand though what I'm saying, or like how to like start filtering? If it doesn't look really great, how much risk do you want to put on that? And start to filter as we get better and better in the pilot program. That that might be a good direction. I mean, you always hear about these guys like I get really picky. I'm only looking for the best. I kind of pass on those that aren't good. They leverage when they start to see the really good ones, and it's just something to consider. And you kind of triggered that thought when you mentioned that with your checklist.
Yeah, thanks, Bruce. I certainly appreciate you know, the insight there. When while the coaches were, giving their commentary, you were drawing the little, I guess, the squares in that messy area. So one of the things that helped me to prolong my exit in this particular trade was I kept drawing those same rectangular or square structure as price were moving up and sideways at the same time. So those little microstructures. So for example, this square, that the first square, I look at the correlation of the volume below, if
Yeah,
it's predominantly red or green, and then see which edge of the structure it's going to breach.
right.
And so then it tells me, well, okay, we're still moving up. And then I did the same thing on the second square, and then eventually it was just moving sideways, and I say, well, okay, it's time to get out. But um, whether it be an advanced trade or not, I didn't feel it had. I felt it would have been confusing to post it, and I was in a doubt in whether I should do that because it would deviate from a clean, straightforward trendline break and accumulation model. But that is what helped me to stay in the trade by drawing those microstructures and see which end of the structure did it breach, and so I know whether it's time to exit to play it safe or not. So I just wanted to interject that. But overall, thanks to the coaches for their comments. As always, I will have replay this and listen to those advice once more.
Yeah, no, that's really great to hear about the drawing up the structure, and then you're looking at the context of the order flow and the transactions within the structure, and it justified you staying in the trade. And you mentioned that you got out and kind of kicked yourself because then it went up like this, right?
Right.
But you didn't know that. And in fact, if I look at this, I was going to mention it earlier because you drew it up. Where's the volume here? Here we got even a kind of a swing here. Here's your divergence, or you're not getting a lot of buying up in here. I think this is a great exit. To take that because all of a sudden it just might crash down to here really
Yes.
quickly, and you didn't want to take that risk, and I think that was wise. So and again, and this is chaotic. We don't know. I mean, especially this kind of um, liquidity and transactions. Like it's just kind of there's a lot of stuff going on in here. So I'm really glad you posted it, and I'm really glad you made those comments because you know it brings up this subject about filtering and looking for just the best and getting really good at them and noticing them. And if you, I'm not saying that you have to take it or not, or that's all up to you and how much you want to risk, etc. It's just that we hear that a lot, and more advanced traders always say like, yeah, I'll let that one go. Or more experienced traders, like they're just like, I'm just looking for the cleanest and the clearest, and they just take those. So this really brought up that subject. Thank you.
You're welcome. Thanks.
Yeah. All right. Any other comments, guys?
Nope.
Nope. Okay. Good. And let's see here. Let's see. Move on. And what else do we got? We do have TD. Okay. I'm sorry, TD. Are you still in here? Let's take a look. Yeah. Okay. Boy, this is a third week in a row with you. So great work, Nan. Really great work you've been doing. And let's invite TD up. He said he was going to be away for a bit, but then come back. So if he's back yet or not. Huh. Some reason I can't. Oh, I know. Okay, never. I got it. All right. Um. Okay. TD, are you there? If so, come on up. Not. Let's see. I know Vinfra. We didn't have you covered this time, but I know you created some content, so maybe we can go over your stuff. We can take a quick look in here. And then others that come in here all the time, Jacob the Prophet and Owen, you guys, like, you're already creating the work. You might as well. And then, oh God, another guy doing really nice work. He just left, it looked like. But you guys might as well put it into the spreadsheet. And it just makes good sense, because then we'll go over it here with you if you like. And you can win like Teeboho did. Right. So anyway, let's take a look at this. What we're looking at, AMD here. Okay. Yeah, this is kind of an interesting one. So this reminds me a lot of Duzman, who would mark up these charts, and, like, you know, he in a bull market, he would see this high liquidity getting filled on the way up, and thinking, okay, there's, you know, check one off the list, you know, a 10, and then you know, higher time frame level, yep, got it, you know, 10. And then you know, break of structure, you know, got it, you know, here's the break of the structure. And then, you know, here's one you know, big, you know, sell, you know, volume bar, volume dot, and you see another one here, or here it looks like, and but price isn't just going anywhere. And this is where I think you have to be a little careful with this strategy, because what's the impetus? What's moving this thing? Is this ready to reverse, or is it just coming up into these areas and then kind of just pulling back, and then ready for a round two to the upside? And I know that this happens a lot with this strategy, but you know, that I was telling Duzman about this, is look at the what's moving this. If AMD had news, I mean, obviously this is, you know, tech, and tech has been kind of all over the place lately. It gets low enough, people buy it hand over fist. It gets too high, people don't want it. They think that maybe they've overextended themselves, etc. So, but this thing has been, I mean, you can even see with the structure here is pretty bullish. And okay, this structure did break, and your trend line did break, and you know, it did trade down to this one, and it did trade down to this liquidity here as well. But this is not really the turnaround that we're looking for a reversal. You've got the criteria in here, but you're just not quite getting the reversal. And the aggressive accumulation here, yeah, it's in here too. It's kind of curious, but it's just not moving. This is where it's kind of a challenge. This one can be kind of confusing, I think, with the setup. With that said, I'll just I'll turn it over to John and D&T, and let them give their feedback on it. So yeah, John, why don't you step in, please? please.
Well, you know, he had good volume on his entry. I mean, that was a lot of sell volume come in substantially. That he's showing there at his number 4. And I'm a bit surprised that it didn't come down. I think it was a good trade. My goodness, God bless him. He was in it for 3 hours. And I probably would have surrendered at that liquidity there at 97.5. But I am, like I said, I think it's reasonable to take that trade given the volume of the sell along with the new liquidity coming in at A. And I'm not sure what that price is. What, 97, 90, 96 or so? Yeah.
96 or so.
Yeah. So you had those two things working. But you know, it just took so long to materialize, at least down to 97.5. But I think the basis was there. Trend line broke, but it was that volume and liquidity switch that I think justified the trade, and it just didn't work to the target. Not every one of them do, but I think it was fine. Yeah, yeah. Yeah, we're so used to trading the futures and having things done so fast, so immediate that 3 hours just doesn't seem fathomable. But
Yeah.
yeah, but quite good. Yeah, Bruce.
Okay. Yeah, I mean, I would say, yeah, that if you, although it didn't work, I mean, I mean, he was in profit for the majority of the time. So, or almost all of the time. So I guess it kind of did work, but it didn't follow through. And you know, after the idea of the setup or the trade and why it works is because of all of this in here getting filled slows down the buying. And then we're looking for like either pullback or reversal. And in this case, if we get enough of the kind of transition from buy side to sell side, we're looking for a reversal, and we're targeting structure and high liquidity. Although this like kind of chopped and went sideways like this, I mean, he still, like, he didn't get hurt. And you know, the criteria was met and he didn't get hurt. In fact, he made some money. Anyway, like, yeah, it's kind of one of the things, if the news on this thing was really bullish in here, then there's not enough sellers in here to move this thing.
Right.
And you know, it just kind of chops around. It's taking a break and waiting until there are enough buyers, and it looks like they're starting to come in. I don't know what happened after this, but it looks like they are ready for round 2 to the upside. So anyway, if anyone...
The other thing that was working against him just a little bit was that shortly after his entry, liquidity started to get added up there at 200.
Yeah.
So market was showing continued interest at 200. Yeah, right up in there. So that would have been of concern. And maybe it's the reason why it kind of leveled off, because it balanced out the liquidity. So you really didn't have a net imbalance as you did initially when you put the trade on. So that was kind of a disadvantage for the trade. But like you said, he didn't get hurt.
Yeah, and that was key. I mean, like, you know, just anyway, enough said, I think, on that, and I'll turn it over to DNT.
Was this what day was this?
Looks like
see
it's
it,
March 16th.
16th. So,
yeah.
Okay. This I don't really know, but this looks like, you know, one of those London closed trickery things, you know, where the London closed still, since we have daylight savings, London closes until 11:30 anymore. It's like 12:30. So yeah, so it looks like it is that EDT? It is, yeah. So yeah, 12:30. So it looks like just it would have made, I could see this thing working out. For instance, if the London close and everything, the daylight savings thing didn't switch, if that switch didn't happen, I could see this thing having that continuation move down. I think everything here was primed for that move down. it just didn't. And these things happen, and and it's good that, you know, he didn't try to like exit and keep re-entering and try to keep re-entering. And that's kind of a problem when we only have one instrument that we trade. Like if we're only trading ES, and this happens on the ES, it's really easy to kind of get myopic and then just sit here. And that's another thing, which is like with the stocks, you have a lot of options. So I don't know if this ties up your mental capital, TD, but if this type of stuff ties up your mental capital, you know, you have a lot of other options. And I don't know if there was like a better option or not, but like this stuff kind of messes with me, messes with my head when I'm sitting in it for so long. Um, but it happens. This stuff, and you know, I like the entry, a sharp move up, and then you took a great entry, and then it just consolidated and potentially, you know, maybe even went higher, like you said. But no, that's just how trading is. Now it's up to you to decide whether you want this type of stuff to tie your mental capital up, or if you want to kind of just try to move on. And
Yeah, that's a really good point, DNT, because like I'm the same way. Like I it it starts to just, you know, it's on your mind all the time, and like what are you going to do, how are you going to manage it? Oh, it's going against me, it goes against me like another time. um you know, how do you want to handle that? And oh no, I'm going to wait for this rotation, should get it here. Oh no, one more, doesn't do it, you know. uh and you know, maybe you could have put that energy into something else that was quicker, working quicker, or you know, panned out. So I it messes with me too, and I don't know how to. I mean, how to handle it is like, yeah, I give it a rotation or two, and maybe like just trail the stop and just get stopped out. I don't know. Anyway, John,
you
how about you? Like, you always get your first target pretty quickly. So and that you are counting on.
Yes.
And
Yes.
then you're kind of like at ease, I guess, and you give it
Well, that
some run
yeah,
time.
that goes into my trade management. You know, you get the first target, you can move the stop in to break even on the remaining contracts or shares, and then you're home free. And then you can take that risk off the table, and that element of fear has been addressed, or at least some of it, that you're not going to lose, and then you can work it accordingly. So yeah,
Yeah, and then mentally it doesn't like um,
exactly.
take as
Yeah,
much out of you.
yeah, 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 yeah.
I mean, because
And
go ahead.
I've done that with trades where, you know, I get covered and I can move that window off and, you know, start looking. I'm not really fully vested to it. I'm paying attention to it, but I'm covered.
Yeah,
And that's huge. 'Cause you know, when you're trading stocks, you're usually looking at a basket of stocks, and that allows you to do that.
yeah. How did you, so like you kind of changed up your approach. I remember like when we first started covering your trades. Let's suppose this was an options level up here. Um, and a lot of times, like you got these really precise entries, like up here, you know,
Hmm.
and but then it just chopped for a while,
Hmm.
and then you kind of changed up and waited for you know. Now I'm seeing that these guys are ready to move it. You know, the
Hmm.
sellers are coming in,
Hmm.
and then you're not getting that precise entry, but
Hmm.
you're not tied up in it,
Hmm.
and also you don't know like if it might, you know, still go up here.
Hmm.
But in this case here, I mean, I'm imagining that this really helped as well mentally.
Hmm. Hmm.
But I don't know if you want to elaborate on any of that.
Well, you know, I'm always looking for order flow events. You know, so that gives me the precision. these markets have changed a little bit. Now I'm trying to time my entries with volume because we're in such an impulsive market. Before, when we're not at war and things are a little bit calm, I mean, going back a year and a half or so, I like to pick buy sweeps and stop runs and icebergs and a combination of all these things that helped me with the precision of the market. Now these things are happening, but it's the volume coming into the market in my favor that has taken precedence, because I just want to be on the heels with a bunch of others trading in this environment, and I'm not doing much in here in terms of the futures. But I think it's the environment that we're in that you always kind of have to tweak what you're doing, and that's what I've done. That's what I've noticed about what I'm doing, because I see the same entries as I did before, but I'm like, okay, wait a minute, let me see some more convincing evidence in terms of volume and liquidity to make sure that this thing is going to go.
Yeah.
Yes.
Yeah. Yeah. Actually, you know what? This brings up a good comment, John, and D&T, because both you guys are looking at options levels as well. So I can see here that he's looking at a gamma level right here. So
hmm
and I think let me try to find the discussion here, because I think, was it you, John, or maybe he reached out, or maybe you said, well, talk to Doug. Someone said talk to Doug.
Yeah, it was a key gamma level, and Doug responded to that, and that's true. It was a key gamma level. There's a couple of gamma levels that are significant to me. The largest call gamma level was up at 205. And that's the point that I was making. I try to position my pivots, my reversal pivots, at the largest gamma levels. So when I do my selection, if I'm going to key in on something, that's really the ones I try to pinpoint. But this was key. This was a hedge wall. It was a key gamma level in terms of spot gammas data. And so he was right to work off of this. And you did see the market sort of top out up here. So that was certainly working in his favor. It just that it wasn't the largest call gamma level. And I don't know whether this was zero DTE or not, but I saw a bit more at 205. But it was a key gamma level. That's true. And you can work off of those, as Doug said. And then Doug came in with Hero and showed how the options had kind of leveled off at this point.
Yeah.
Yeah.
Yeah. Here we go. Here.
Yeah.
So
Yeah. See, he's showing that it's a key gamma level. It's a hedge wall. And then above it, 205, which is not showing on this chart, is the call wall. And the options, they've just kind of leveled off at this point. And what it basically tells you is that, we're probably not going to see 205. That's my read of Hero in here. Calls have been leading the way up. At 1040, 1050, the stock really started to turn up, realizing that they have some exposure up there. And as soon as the stock starts to move in that direction, what that orange line is telling you is that the market's been buying calls all day.
okay, orange is calls.
Yes, sir.
Okay.
Yeah.
Okay.
So that's why, and we see that a lot with the futures and the stocks. That it almost seems like the market will realize, oh shit, I better, I better get long here if this thing starts to rally, because I have got a lot of gamma exposure up there, and that's really what Hero tells you. So it doesn't really always run neck and neck. It can kind of lag behind until they realize, okay, the market, they're starting to buy this thing. We better get long. And so at 11, 12 or so, you saw the market really start to spike up because they know they've got to cover themselves. Yeah, right there.
Yeah.
Yeah.
Do you look at this space in here, the divergence in here, much? I mean, because this is going hand over fist here on the calls, but here, look at this. This list just looks like, if the order flow, is good, this could be a great trade right in here.
Absolutely, absolutely, and it goes to what I was saying, Bruce, is that they keep buying calls. The market will correct. The market
Mm,
will fix that. They have to.
mm,
Not that they want to. They have to, because that's a lot of money there. If the hedging community does not get long there, and that's the value of Hero. That's the value of knowing the underlying forces in this market, which is the force in the market. That is the option players.
nice. I mean, yeah, it's really great stuff. It's a whole nother kind of avenue in here that
It is, and it's growing every day. I mean, it's something that I think every trader needs to be aware of,
yeah.
because it does represent a huge community of buying and selling in the underlying.
Yeah. Another thing too. Now I know Doug, Jack, and others do this, but once Doug sees that, he'll go into a vertical spread up there,
Hmm.
and he'll sell the 205s. He'll buy the, I mean,
Yep.
he'll sell the 200s and buy the 205s, and just collect the premium for
Hmm.
the 0 DTE. Um,
Yeah.
this is really great, and this is kind of like, you know, um, I kind of view it as next level. That you're exposing yourself in a different way, but it's pretty risk adverse, and
Yes.
you're going to make some money if it goes against you and it stops you out, but you made some on the um, the time decay.
Hmm.
Uh, so and you know the the kind of the quants, the banks, the institutions, the hedge funds, they're doing this kind of stuff so
Hmm.
much all day
Yes.
long,
Yes.
and this is like you're years ago, like I remember, oh, the market makers out to get you and run your stops and take your money, and haha, they got you. It's like, I think they're just trying to, keep their book in line. But here, these days, it's not like that. It's like, well, we've got to buy 50,000, 100,000 shares of this or that or whatever it might be. And we need to hedge that risk, and we're going to buy options here. We're going to buy bonds over here. It's going to be spread across all sorts of other instruments immediately.
Hmm.
And you know what I thought was a kind of an interesting subject to get into on this is, once we feel comfortable with something like that, this is a great direction to go.
Hmm.
It's pretty. It sounds advanced. It's really not. It's pretty simple stuff,
Hmm.
and it can actually protect you. Um,
Yes.
so if people are interested, like yeah, reach out to Doug.
Yeah.
He's 3 times a week. He has a
Yeah.
webinar.
Yeah.
And Jack is another one that does a lot of this kind of trading.
Hmm.
I don't know if you do, John, or not.
I have been lately. Yes,
Ah,
I
ah,
have. I've been trading verticals on the Qs. But absolutely, yeah, it's very efficient, especially later on in the week. You can have Friday expirations on the stocks, and
uh-huh.
so then you can really start to capture nice time decay. Um, but like you said, years ago, it always seemed that the institutions had the upper hand. Now I don't think it's the case. I think there's so many traders doing this kind of thing that the institutions, the hedgers are really on defense a lot of times, to cover their delta, and so it's kind of even the playing field somewhat, between the small trader and the institutions, because there's so many of us.
Yeah, yeah, yeah. No, I agree. And the
TD is
tools.
back.
TD is back, and we have the tools now too.
Yes.
Uh,
Now that's the thing, and that's where I think Brent over at Spot Gamma is just a true pioneer, because somebody like Cargill, they've always had Hero. that's the way they knew where they were, and Brent has brought that in and said, oh, well, I'm just going to give this, to everyone. And that's essentially what we have.
Yeah, exactly. TD, I think you missed everything. We're just about to end up on you, basically.
Yeah, I apologize, guys. I got caught
Okay.
up running kids around different activities, but I will listen back.
Yeah, no problem. I think you'll find it interesting. We went over a bunch of different things.
Mhm.
Very good. Thanks a lot.
All right, excellent. Guys, let's wrap it up here. I think we'll call it a day. Unless John or DNT had any other comments you wanted to make, bigger picture, smaller picture on this image.
No, we covered it.
Okay, DNT, anything?
No, this looks good. Thanks,
Okay.
guys.
Okay.
Thanks, everybody.
Yeah, we'll wrap it up, and I think it's John's turn on the last word.
Last word. Okay. Well, I think when you were talking, Bruce, about stop management, it's a great practice. But in this market, in these times, I think it's essential to put a priority to stop management. The way this market is just whipping around, like I said, I'm doing less in the futures because I just can't justify the risk at this point where I am. But to put a lot of time into moving your stops and limiting your exposure, like I said, I think is paramount. And so we should allow a lot of practice time to perfecting that because these markets are moving so quickly. So with that, we'll see you next week. And thank you.
Excellent. Thank you so much, John. Thank you, coaches.
Yes, sir.
Thank you, traders.